Hey guys, we're on site today right here in Surfside Beach, sunny and beautiful outside of the best triplex investment you are going to find in the Myrtle Beach market. We're talking a 90% occupancy rate. It's bringing in over $231,000 a year in gross rental income. Now, guys, I'm going to work you through an as-is profit and loss statement. I'm going to show you how much income this property is bringing in, all of the operating expenses, and how much profit you are making at the end of your first year, just like it sits. Then we're going to work through a remodel scenario. I'm going to show you, hey, if you put $75,000 in these 3 units, how much will it increase the gross rental income? Lay out all those operating expenses and show you the $124,000 in profit it will generate if you'll simply remodel this unit. We'll work through the appreciation. You know, historically, if you bought it and held it right, how much money can you make owning and operating and selling this property by timing the market just right? We're also going to work through your taxable income. I'm going to show you over the next 5 years, owning and operating this property, how is it going to impact you on your taxes? What can you write off? Can I write off my interest? How much depreciation can I write off? What about those loan costs? I'm going to work you through all of that, guys. We're then going to look at your depreciation and understanding a defendable basis. And then finally, we're going to look at cash flow. We're going to see what is actually hitting my bank account if I self-manage this unit or if I have a property manager over that 5-year period. Finally, guys, we are going to look at selling this property in year 6. I'm going to work you through capital gains calculations, what you're going to owe the IRS, and then finally selling this property at that $4.2 million price tag and just how much hits your bank account. Now, I've chocked this video full of everything that you need to make a savvy investment decision. You got to watch the video through to the end so that you don't make the amateur mistakes that plenty of investors make in real estate. I want you to win, and I want you to win big. So please watch the video through to the end so you make a calculated decision for your next investment. Now, guys, please hit that like button. Please hit that subscribe button and drop me some comments. I enjoy talking to you guys. It's a lot of fun. I don't want to hold us up. Let's get into the video now. You'd like to invest in commercial real estate. I'd like to show you how these properties make profit and break down all their expenses so you understand how they operate, how they appreciate over time, and how this will impact your taxes. I'd also like to let you know the property's cap rate and how it compares with similar properties in the market, how the location best services its users, and the potential for future growth. I'd like to fill you in on the historical and future occupancy trends, as well as potential management structures affecting the investment. And we won't miss the investment's risk profile nor the best exit strategies. Yes, we'll cover the condition of the property, any value add potential and repositioning, but we'll also dive into special topics like customer base, market positioning, and marketing and booking strategies when it applies. And if you stay tuned until the end, I'll show you my top picks for the best commercial real estate deals that have generated the most annual profits, have the highest appreciation, and the best tax implications. So no matter if you're a first-time investor or a seasoned professional transitioning into the real estate game, or perhaps simply a casual investor looking to relocate to the beach to live, play, and invest so that the passive income can support you in your retirement years, whether you have 20% to pay down because you're financing or you're a cash buyer, if it's a commercial real estate investment that you're after, you'll be better because I'm aiming to give you a 10 times return on your time for watching my videos until the end. All right, guys, let's check this property out. First, the outside. As you can see, it is gigantic. I'm going to take you around. I'm going to show you around real quick around the area. You can see, very, very nice. Surfside Beach. You can see the ocean. That's the beach access there. See that little spot right there, beach access? It's literally right across the street. As you can see, surrounding areas are great. properties are phenomenal all around this thing. It's a good area. Now, I'm going to take you around here. Now, there is a pool on site and an elevator, which is absolutely phenomenal. As you can see here, I'm going to get around back. There's an elevator for carrying up your luggage up those 3 flights. That's pretty cool. I think it's a nifty little feature. Fire pit, there's outdoor furniture and stuff, as you can see. And there's a pool. Check it out. Not bad, right? This one feature shows up phenomenally in Airbnb listings and VRBO listings. It adds a lot of appeal for tourists wanting to make sure they get the most for their vacation. Now you can see here, there's parking underneath. I'm going to carry you upstairs into the first unit, and then we're going to check out the gigantic balcony that overlooks South Ocean Boulevard. Let's get inside, guys. Now, as soon as you come in, immediately to the left, we have the kitchen. We do have 2 rooms on the left side, 2 rooms on the right side, and plenty of space in between, as you can see. Check this out. Nice tile, range, dishwasher, microwave, sink, everything you need for a vacation, guys. Let's check out the first bedroom. Bingo. Dual vanity, Jack and Jill. Connects to the other. Now, back behind this door, we do see the shower and the restroom, of course. The next bedroom, as you can see, we're going to cut right across the way. We're going to hit that balcony in just a minute. As you can see, plenty of space, plenty of room. Another dual vanity. Tub shower combo. Again, Jack and Jill coming right into the other bedroom. Now, let's check this out. Plenty of space up here. Look at that, guys. Now that is your South Ocean Boulevard view. And those are guests that are staying here, heading over to the beach access, doing what tourists do when they're vacationing at the beach. Now there is another unit right up this way. If we take the stairs down, it takes us down to the first floor, to the parking area. And there's another unit up this way here. Now this is going to be the balcony on the second unit. Again, we'll come out that door in just a minute. But you can see it's pretty spacious. And of course, has a phenomenal view of Surfside Beach. I'll take you up just to see Unit 3. Although we can't get into it. Can't see the pool there. Space. Because there's tenants in it. But I do want to show it to you. Just a little bit. As you can see, super cool. Very nice. We're at Unit 3. Now let's go downstairs and get into Unit 2 so you can check it out. Getting the cardio in today, come on. We're going to come this way this time, guys. So you can see the courtyard space. Fire pit. Nice deck with a table. Another deck with table, and we're at unit 2. Let's get in unit number 2. So as soon as you walk in, wide open spaces. You've got 4 rooms, space in the center connecting all 4 rooms. Immediately to the left, we do have our kitchen, very, very similar to the last unit that we went in. You can see same layout, stove, microwave, a refrigerator, range, dishwasher. Our first bedroom. 2 double bed, 2 beds, dual vanity. Nice natural light coming in from the center of that window for the dual vanity. Shower. Jack and Jill connecting to our next bedroom, as you can see. Flat screen TV. Closet. We're going to get to that balcony in just a minute. Another large spacious room, dual vanity, very nice, nice flooring. This is going to be an actual tub shower combo, as you can see. Double beds. Now, they've got the game set up in the middle of the room, which is phenomenal. Flat screen TV, as you can see. And of course, a massive and expansive balcony right here. Not bad. Not bad at all. All right, guys, that wraps it up for Unit 2. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially in multifamily properties because of the strong rental demand from a growing population. The city's population grew by over 20% just in the last decade, with a significant portion of new residents moving here due to the low cost of living, warm climate, and access to beach amenities. I believe you should invest in commercial or real estate in Myrtle Beach, South Carolina, especially in multifamily properties because of the tourism-driven economy. Tourism accounts for over 25% of the region's economy. The demand from tourism-related workers ensures a steady flow of renters in multifamily units year-round. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially in multifamily properties because of the affordable property prices and high cap rates. With an average cap rate for multifamily properties being typically around 7 to 8%, our market is higher than national averages for coastal areas, offering strong rental yield potential. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially in multifamily properties because of the potential for value-add investments. Many properties near the coast have strong locations but may be underperforming due to outdated facilities or lack of amenities. Renovating these properties can create significant upside for potential investors. Let's work through an as-is scenario purchased just as this property sits right now. How much money is it generating? Let's look at the profit and loss statement. You're going to be shocked. Now, it's a triplex, 3 units. Purchase price is $1,796,000. Acquisition cost, we're talking about your attorney, your inspection, your broker fees. It's going to be $37,620. Then you're going to have loan costs. That's going to be 2% of the loan amount. Now that's $26,940. Essentially, you're going to be financing 75% of this. You're going to pay 25% down in the down payment, and you're going to take 2% of that 75% of the purchase price for those loan costs. Now, less your mortgage, $1,347,000. That's that 75% of the purchase price. Now, you have your purchase price, you add in acquisition cost, you add in loan cost, you take out that mortgage, and you're left with the initial investment amount. That's $513,560. Now, net operating income. Your net operating income is going to be your gross operating income minus the operating expenses. That gross operating income is the gross rental income. Now, that's going to be $67,970.29. That's an important number to know on any commercial investment so that you can calculate cap rate. Cap rate is capitalization rate. Capitalization rate is essentially the dollars that flow into that investment. When you have a cap rate, you can easily compare investments. Now, gross operating income, again, that's the gross rental income. That's $231,921.17. Yes, you heard me correctly. This property last year generated $231,921.17. It has a 90% occupancy rate, 90.4 if I recall correctly. Wow, that is stunning. Just as this property sits. Now the VRBO fee, that's 8%. That's going to be $4,634.97. The Airbnb platform fee is 3%. It's going to be $6,957.64. Now that's going to bring you to a subtotal. If you made $231,921.17, you take out VRBO fees, you take out Airbnb platform fees, that's going to leave you with a gross rental income subtotal of $220,328.57. Now, your principal and interest on this property, we assume that you're going to be using financing to buy this property. Most buyers do use financing for commercial investments. That's going to be $107,532. Your personal property taxes, that's for the furnishings inside of the investment property. Anytime you buy a property in the state of South Carolina, you are going to have to pay personal property taxes if it is an investment property. That's $2,087.29. Your property taxes, which is different from your personal property taxes. This is just flat out property taxes for 2024 were $13,421.25. That is for the year. Your home and flood insurance, $11,406.46. Electricity, $6,089.43. House supplies, that's going to be $2,615.41. Internet and TV, $3,535.45. Pest control, that's going to be $625. Pool service, we're looking at $3,550. Water bill, $3,938.25. Landscaping, $565. Surfside hospitality taxes, $1,627.70. That is a local tax. Now, maintenance, I've got you at 3% of the gross operating income. That's $6,957.64. There is no HOA fee here, so there is going to be maintenance cost. It's going to vary. It's not going to be $6,000 or $7,000 every year. We all know that. However, we have to pick a solid number. I'm going with 3% of gross operating income. It might be $2,000 one year. It might be $10,000 the next year. I'm going with, $6,957.64. Now, that's going to bring you to a net operating expense subtotal of $163,950.88. If you take the net operating expense subtotal from the gross operating subtotal up top of $220,328.57, guys, if you self-manage this property, you're walking away with $56,377.69 per year, as is, no remodel, no improvement, just like it sits right now. Now, if you hand this off to a property manager at a 10% fee, you're still going to walk away with $33,185.57. That is a win-win all day long, guys. It's a cash-on-cash return of 4%. It's a cap rate of 3.8%. Now, let's just work through this, guys. You're not doing anything if you hand it off to a property manager and you're collecting $33,000 a year. Come on. Now, let's compare that with the stock market right now. Really? All right. Now, VRBO income. You're looking at $57,937.07. That was 25% of the rentals. This does assume 77 turnovers. It's booked for 330 nights out of 365 for the year. That's 77 turnovers. The average daily rate was $441.79, and the average revenue per stay was $3,003.53, what you're going to find out coming up in the video is he makes the most money. They make the most money renting this property out as a 10-bedroom unit, not in the individual unit rentals. And that's where the secret sauce is. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, because our market has been the fastest growing market out of the 150 most populated markets for the past 3 years. Over 90,600 people relocated to Myrtle Beach, South Carolina in 2023 alone. This means increased demand for commercial space like retail, multifamily, office, and industrial, and ultimately excellent annual profits and appreciation. Now, for retail, more residents equal more consumers equal higher rental sales potential. This drives up rents and occupancy in retail centers. For multifamily, higher population boosts demand for rental housing, pushing rents up and lowering vacancy. Now, for office, job growth typically follows population growth, increasing demand for office space. For industrial, more people means more consumption and e-commerce activity, increasing warehouse and last mile logistics demand. Ultimately, the return on investment impact is higher rents, lower vacancy, and rising property values that drive higher net operating income and appreciation. I believe you should invest in commercial or real estate in Myrtle Beach, South Carolina, especially oceanfront hotels in the hospitality industry, because of the 20 to 22 million tourists that visit our market each year, which is the #2 vacation destination on the East Coast. High tourism equals steady demand, making it one of the most visited beach destinations in the United States. Our oceanfront hotels benefit from consistent seasonal occupancy, premium nightly rates compared to inland properties, and repeat visitors including families, snowbirds, and golfers. Now let's work through a remodel scenario, okay? I'm saying that if you remodel this property, you can increase gross rental income numbers by about 34%. I've seen it done on other short-term vacation rental properties. I believe it's totally doable here. Again, that purchase price is $1.796. You've got your acquisition cost of $37,620, your loan fees of $26,940, less your mortgage of $1.347, and then you've got you got to add in your $75,000 for remodel cost. I'm saying that if you put about $25,000 per unit into this triplex, you will increase the gross rental income numbers by about 34%. Guys, essentially, we're left with an initial investment of $588,560. Now, your net operating income, that's going to be your gross operating income minus your operating expenses, was $143,748.21. Your gross operating income, which is your gross rental income, is $310,000. You went from, in the previous example, you were making $231,921.17. That's as it sits right now. By remodeling this unit, you're going to jump those incomes, or that income, up to $310,774.37. Again, VRBO fee $6,000, Airbnb platform fee $9,323.23. If you're making $310,000 and you're backing out $6,000 for VRBO and $9,000 for Airbnb, you are left with a gross rental income subtotal of $295,451.14. Now, all of these other numbers are the same as the previous example. Those are all of your operating expenses. So your net operating expense subtotal down at the bottom was $167,2615. If you take the net operating expense subtotal from the gross operating subtotal up top of $295,451.14, what are you left with if you self-manage? $128,424.98. Guys, if you pass it off to a property manager at a 10% property management fee, you're still walking away with $97,347.55. And if you don't believe me, there's a quadplex for sale in our market right now for $8.9 million. Now, it is oceanfront and it is remodeled phenomenal. It's a brand new property, basically. You know, they're projecting $260,000 a unit on that quadplex in rental income. It's totally doable. Short-term vacation rentals are where it is at. Not long-term rentals, not necessarily, in my opinion, not even like apartment complexes and multifamily. The short-term vacation rentals really have some of that upside of the stock market and give you a phenomenal return. All right, your VRBO income was $57,937.07. Remodel budget was $25,000 per unit. Remodel projects a 34% increase in gross operating income. You will recover your remodel budget within the first year. That's how you know how much to. That's what sets the ceiling on the remodel. You've got to be able to recover it the first year. Now, average daily rate, $941.74. Average revenue per stay, $4,036.03. Assumes 330 nights booked and 77 turnovers. Again, that is a 22% cash on cash return. That is a cap rate of 8%. Right here in Surfside Beach in Myrtle Beach, South Carolina, you've got a stellar, one of the best commercial real estate deals on the market is sitting right here in this off-market property behind me. It's up to you if you want to make that cash flow, but the deal's sitting right here. I get calls and emails every day from investors just like you looking to make their move into the Myrtle Beach market. They want to invest in short-term vacation rental properties. They want to invest in oceanfront condos. They want to know where the best deals are in our market. Well, guys, you're talking to the right person. 843-360-1737. I'm going to help you put your hands on the best deals in our market. If you're a first-time investor or a seasoned investor, if you're 1 year, 6 months, 3 years out, I don't care where you are in the investing process, pick up the phone, give me a call, send me an email, shoot me a text message, and let one of the many stories on our channel be one of your stories. Let's work through a few other things about this deal, guys. The mortgage data, again, your loan on this was $1.347 million. I've got you at a 7% interest rate. You probably get it cheaper now, 6.5. Amortization period, 30 years. Loan term, 30 years. Now, let's work through this. It's a triplex, so you don't need commercial lending. You don't have to get a 5-year loan on it. There's not more than 4 units in this property, which means you can get a 30-year fixed rate loan on this property, which protects you from interest rates going up and down on other commercial investments. It's a less risk than an apartment complex, than other types of commercial properties. Payments per year, 12. Periodic payment, $8,961. You're going to pay right about $9,000 a month for it. Annual debt service is $107,532. And then your loan fees and costs were $26,940. Let's work through appreciation on the property. Now, I had to choose a historical snapshot in time, and I had to find one of the best historical snapshots I could find. That was a 2015 sold of $530,000. You fast forward to 2021, they sold it for $900,000. That is a $370,000 increase in appreciation, a gain that they made on this property. That's $61,667 per year. Now, they're selling the property right now for 1.8. And as it sits, it's 90% rented per year. You got a business you can walk right into. They've done the research. They're making the money. It's up and running. The risk they've pretty much taken. Think about the leap. If you would have bought it in 2015 at 530 and then come in and sold it at 1.8, look at the appreciation you could have made on this investment. All right, so let's work through some of the unit mix here and just a few more details about this investment. So your gross operating income per unit as is $77,307.06. Post remodel, the gross operating income per unit is $103,591.46. That is a beautiful jump, and I believe it's totally doable post remodel. Now, your unit mix, the unit 1 is a 4-bedroom, 2-bathroom. It brought in $15,354.91. Unit 2, 4-bedroom, 2-bathroom, brought in $14,449.17. Unit 3, 2-bedroom, 2-bathroom, brought in $24,614.55. Yes, the entire house is 10 bedrooms, 6 bathrooms. Now, they do rent it that way, and they brought in $169,485.52. Guys, that's a total revenue of $223,904.15. That was in the 2023 year. So they've increased in the amount of revenue that they brought in by about $6,000 from 2023 to 2024 in a supposedly declining market. This is an alpha property among beta properties. Essentially, it is outperforming the rest. It is a proven and established business model that is getting better and better already in place for you. A lot less risk. Taxable income. How is this going to impact you on your taxes for the next 5 years, 6 years owning this property and operating it? Let's work through it. Year one, you're bringing in post remodel 310, 774, 37. You've got operating expenses to the tune of $74,000 and some change. If you take the operating expenses from the gross operating income, you're left with a net operating income of $235,956.98. Now, your interest on the mortgage is $93,637.21. That's a tax write-off. Your depreciation, $32,541.49. That's a tax write-off. Coming up next, I'm going to show you how I arrived at that number. Your amortization of loan cost and fees was $5,388. Remember, it was $26,000 and some change total. Amortization means that you have to divide it over the life of the investment. We're going to assume that you're going to hold this property 5 years and sell it in the 6 years. So you can write off that $26,000, that 2% of the loan cost over each year. Your leasing commissions, I'm assuming you're going to have a property manager manage this. That's $31,077.44. That is 10% of the gross operating income. And then your real estate taxable income is $73,312.85. Now, you've got a tax liability at 37%. I just assumed 37%. Your tax liability could be a lot lower. I just chose a number because we have to choose a number. So right here, your tax liability comes in at $27,125.75. Ultimately, we're going to take your net operating income, subtract out that write-off for interest, subtract out that write-off for depreciation, subtract out your leasing commissions, and that's going to give us our real estate taxable income. That was the $73,312.85. Then we're going to multiply that by 0.37, assuming you're in a 37% tax bracket, and you owe taxes on $27,125.75. We repeated this process for the next 5 years. You can see it right there on your screen. So we're just going to assume that in the first year that you acquired this property, you're only going to be able to write it off for 11 and a half months worth of depreciation. That's because the first 15 days of the month, you didn't own the property. And then for every holding year, we're going to assume a full 12 months worth of depreciation. And then in the disposition year, we're going to assume again that 11 and a half months. That's going to be, you only owned it for the first 15 days of December. Now, year one, bottom table, depreciation deduction. You've got that $933,758.57. You're going to multiply it by that 0.03485, which is that residential type of property write-off that the IRS allows you to take. That's going to give you a depreciation deduction to the tune of $32,541.49. Now, in those holding years, you're going to follow that same exact principle. You're at $33,951.46, and that disposition year, you're back to that $32,541.49 for a total depreciation over the life of the investment of 5 years of $166,937.36. That's how we arrived at the depreciation number for this property. Now, let's jump back into your cash flow. All right, bottom table. Net operating income, this is basically, what money is hitting your account actually is another way to say cash flow. Now, your net operating income is $235,956.98. Your annual debt service, that's those mortgage payments. So you got the net operating income coming in from the tourist. You're going to subtract out your mortgage payments for the year to the tune of $107,532. You're going to subtract out your property management fee of $31,077.44. You're going to subtract out any funded reserves. I've got you at 3% of the profit, which is $3,852.75. That's going to give you your cash flow before taxes. Before I've ever paid taxes on this property, in my account sits $93,494.80. Now we got to minus out or subtract out that tax liability that we calculated in the table above for year one. It was $27,125.75. Now that's going to leave us with a cash flow after taxes for a property management scenario of $66,369.04. Now, On the bottom there, you'll see in green, if you were to self-manage this property and not pay 10% of that gross operating income to a property manager, you would have walked away with $97,446.48 in that first year. And I see plenty of husband and wife couples do this all the time. I see couples where, you know, the husband is a dentist, a doctor, a lawyer, professional, whatever, business owner. The wife manages the property and the guest experience. They walk away and pocket all that extra cash. They run the business from their laptop and their phone. They acquire My Network when they purchase here, so they get cleaners and contractors and everything that they need to do the business. And it's a win-win for everybody. It's that simple and that easy. Now, on both these charts, guys, I did assume a 2% escalation in rental income for each year and a 2% escalation in operating expenses. So you can see in the corresponding years, the income keeps going up and the expenses keep going up. Could be less, it could be more, but we had to have a number for our model, so that's what I chose. So what does it look like to sell this property in year 5, in year 6, after you've held it? All right, let's work through it. You'll see there, at the very top of your screen, we have to know what our mortgage balance is. You have a principal balance up top, and you have a total unpaid mortgage balance up top as well. Now, keep those in mind. Now, your projected sales price in that 6th year, is going to be $4.286 million. Yes, that assumes an 8% cap rate in keeping with the remodel scenario of where the property is functioning that I've presented already. So I'm saying if the market doesn't improve and if the market doesn't get worse and we keep that 8% cap rate, you can sell this property for $4.2 million. People will pay for that cash flow. It's beautiful. Now, the basis at acquisition, you paid $1.833 million when you bought the property. You took depreciation to the tune of $166,937.36. Essentially, you're going to subtract that from your basis, and that's going to leave you with an adjusted basis at sale of $1,666,682.64. That is what the IRS is saying the property is worth, essentially, at the sale. All right, let's talk about capital gain on sale. That sale price was $4.2 million. You got the cost of sale. That's your broker fees, $171,478.59. You've got an adjusted basis at sale. It's what the IRS said it's worth, of that $1.6 million. You've got the gain or loss of $2,448,803.63. Essentially, you got a sales price. You subtract out the cost of sale, you subtract out the adjusted basis at sale, and then you are responsible for that gain of $2.4 million. Now, you've also, another way to look at the capital gain from appreciation is to then subtract out the straight line depreciation over the life of the investment. So if you've got 2.4 and you subtract out that 166,937.36, the capital gain from appreciation is $2.2 million. Now, you can also add in, which is technically subtracting, those unamortized loan cost of $26,940. That's going to leave you with an ordinary taxable income at the end of the day of $2,254,926.28. Calculation of sales proceeds after tax. You've got your sales price of $4.2 million. That's what you sold the property for. You got the cost of sale of $171,000. That's your broker fees. You've got a balance of funded reserves. We've got to add back in. You've been setting aside that 3% of the profit every single year. That's $19,263.75. You take out your mortgage balance in year 5 of $1.2 million, and that's going to leave you with a sales proceeds before you pay any taxes of $2.9 million. Now, you've got to pay tax on ordinary income. That's 37%. At that 37% tax bracket. That, of course, is $834,322.72. You've got to take out your tax for depreciation recapture. Essentially, the government says, we've been giving you a great tax write-off for depreciation for these 5 years that you've owned the property. Well, we want a piece of that back. That is going to be 25% of the total depreciation that they let you write off over the life of the investment, $41,734.34. And then they're also going to want capital gains recapture, which means, hey, you know, we gave you a break here. We want 20% of that capital gain break that we gave you. Ultimately, that's $456,373.26. If you come in with the sales proceeds before tax of 2.9. You take out the ordinary income tax. You take out the depreciation recapture tax. You take out the capital gain recapture tax. You are left with a sales proceeds after tax of $1,574,365.78. Now that is what I am talking about. A really, really good deal sits right here in Surfside Beach, waiting for the right investor. This is one of the best deals in our market. Call me today, 843-360-1737. It is off market, so you got to pick up the phone and give me a call.